Well, Fed Chairman Ben Bernanke, as you know, beginning his semi-annual testimony to Congress in just under 2 hours. What kind of clues will Bernanke give about the Fed's strategy going forward? Well, we're joined now by Harvard University economist Martin Feldstein. He's the former head of the National Bureau of Economic Research, the group that dates the beginning and end of the recession. And I believe we're about 19 months now into this recession. Maybe perhaps that's a good place to start. Are we near the end or what?
I don't think so. I think we're going to see some positive signs coming out when we get the news about the second quarter, and we'll see more good monthly numbers. But I think there's a real danger that this is going to be a double dip, and that after 6 months or so, we'll have some more bad news.
And where are we in the dip, or where are we in the ascent?
We're in the good news part.
Mm-hmm.
The second quarter was a big improvement relative to where we'd been earlier in the year. Still negative, still declining. Third quarter could flatten out, could even be positive, but I don't think sustainable.
Okay, so when could we see that dip then? When are you looking for?
I mean,
fourth quarter?
I think we could slide down again in the fourth quarter. I think once the fiscal stimulus has worn off and some of the inventory rebuild is finished, there isn't going to be enough to sustain a really solid recovery. Okay,
Martin, I want to talk to you about stimulus, but I'll leave for that for a little bit later in our conversation, because first off, with Bernanke testifying later this morning, Carl Weinberg, our guest in the next hour, says don't expect a whole lot of fireworks. What is your view?
Well, Ben has to reassure the Congress that and the public that inflation is going to be handled properly, that they're not going to let this enormous buildup of excess reserves in the commercial banks become inflationary. And that's what the whole discussion about exit strategy is all about.
Right, and you and I were actually just reading in the break the op-ed that he wrote in the Wall Street Journal talking about his exit strategy. Were you able to go through all of it or not?
Yes, I was able to, but I think there are no surprises in it. I mean, basically, there are a number of technical ways that the Fed can, in principle, stop these excess reserves. Remember, there's more than $800 billion of excess reserves. A year ago, it was about $3 billion. More than $800 billion of excess reserves, to stop that from fueling inflation as the economy begins to recover. In my mind, the big problem is not whether he can do it technically, but whether raising interest rates, which is what any one of those strategies would do, is going to be acceptable to the Congress.
And in this environment where the Fed is being vilified by those in Congress, you think that's going to be an even more difficult task for him?
Well, yes. And I think a year from now, 2 years from now, whenever it is that the economy is beginning to heat up and he wants to raise interest rates, we're still going to be looking at high unemployment numbers. Could be 8% even. At that point, Congress is going to be very unhappy with the notion that the Fed is about to raise interest rates.
But some might say, Marty, is that if we have employment at 8%, why would we be worried about inflation?
Well, we could see inflation coming from a lower dollar. We could see inflation coming from higher commodity prices. But the key thing would be that you've got to stop it before it happens. And the danger is that with these reserves and with a potential explosion at that point in lending, the Fed will want to have its exit strategy to prevent those excess reserves from becoming a source of inflation.
Okay, Professor, just hang on, because we will be with you in a little bit to talk more about stimulus and also inflation and the dollar with Martin Feldstein. We'll be back. Well, we are back with Harvard University economics professor and member of President Obama's Economic Recovery Advisory Board, Martin Feldstein. And Martin, right before the break, we were talking about inflation. And I just want to get your forecast. If we would see rampant inflation, let's say, starting next year, how could that derail our recovery path?
Well, it would derail it because if inflation really took off, if we had a repeat, and I'm not predicting this, but if we had a repeat of the kind of inflation we had in the late 70s, beginning of the 80s, the Fed would have to really step in and crunch the economy. So I sure hope that they are going to take steps to prevent that from happening.
Okay. Now, another topic that will likely come up in this testimony is stimulus. Do we need another stimulus package? You've been on the record saying we do not. It's totally premature for us to be talking about this even?
Well, my sense was that a stimulus package, the original stimulus package, that was a good idea to have a stimulus package. The Fed was essentially unable to stimulate the economy in the traditional way. So we needed a fiscal stimulus. But I think the fiscal stimulus that Congress designed was really a very poor stimulus. Only about $1 out of every 4 of the increase in the national debt actually went into government spending. The rest went into transfers to households or state and local governments, and they're not spending all of it. And so we're not getting as much bang out of that increase in the national debt.
So perhaps good in concept, but bad in execution.
Very bad in execution, the way they did it before. And at this point, you just can't keep spending money to stimulate the economy. So I think there are other problems that need fixing and that are going to cost money, including the housing sector. Well, healthcare is not an economic recovery problem. But the housing sector, we still have very serious problems. The financial institutions, the public-private investment partnership has failed, so they're going to need to do something else, and I'll bet that'll cost money. So I don't think they should spend that money in more giveaways to state and local governments.
Right. We're already staring, I think, at a $1.8 trillion deficit at this point. Don't have a whole lot of time, so Martin, last question is, should Obama reappoint Bernanke?
I think Ben has done a very good job, and I think he should be reappointed.
Okay. Martin, thanks so much for joining us. Really great to have you with us to preview the testimony. Martin Feldstein of Harvard.